Hello everyone, this is going to be a fairly long video. I just wanted to mention any templates you see in this video will be released via my website at luxury.trade. You can sign up down below to get any previous templates as well. Also follow Entropia and Entropia Intel on X for our free news aggregator and to keep up to date with the project we are building over there. And also be sure to sign up to any ref links of Bybit and Blowfin below for any trading deals that you want. It'd be greatly appreciated for any promos or anything I'm going to give out. You'll be the first to know about it there if you're trading over on those links. There are timestamps below in this video, so please, if you want to skip to any part of the video, just go and check it out. It's going to be a fairly long one. We're going to cover footprint and TPO charts in this one in a decent amount of detail. So yeah, be sure to skip over to any sort of particular segment if you want to go through there. But let's get into it. So the platforms I primarily use are ExoCharts. Again, that's no surprise. You're probably familiar with this. Again, there'll be a link to that down below as well. We'll start off with that, and I'll talk you through any nuances that maybe Exo has in reference to other softwares as well, and all the bits and bobs around that. But to begin with, obviously, if you load up Exo, this is obviously a chart I've just loaded up randomly, but if I just click on here, this is the view you're all going to get really to begin with, okay? And what you're going to see here is you're going to have an option for chart, new DOM, or a new web. We're going to click on chart to begin with, and then we're going to select the pair. Let's just imagine in this case, we're going to do Bybit. We've selected Bybit now, and from here we're going to be setting up the footprint to our liking. Now generally I'm using BTC USDT. Again, this is for you, but you've got all these different pairs you can select here, okay? Every single thing will be in here, and also there'll be a separate video going over aggregated data, but I'll mention that as well briefly within this video. But to begin with, yeah, you want to be setting up your footprint. I'll show you the way I do it. The first thing to do is obviously the tick size is really low. So, and this is really down to your own preference. Tick size is basically these little clusters here. Okay, you want to be moving this towards any sort of granularity, best really down to your own preference. Okay, generally the higher you increase it, let's just say to 500, you know, you're going to get these much larger blocks. Okay, and it's going to be sifting all this one tick data, okay, into groups of, you know, all of these will be grouped into, let's say, groups of 500. So now you got one big block, you know, that consists of all of that. Okay, so you can see that, and you can see now if you zoom out, you got a much better view of this. You know, with the one tick you can't really see anything. So you know, do this to your own needs. It will depend based on volatility, so you'll be changing this and generally increasing this based on volatility. So if you've got increased volatility, you will want to increase this a lot more, rather than if you're in a really slow moving market. The second thing I would do as well in this case, okay, is I'm going to right click, chart data, and I'm going to go over to data source. Really, really important here, because what you're seeing right now is you're seeing all the data in Bitcoin's value. So for example, down here, that's 110 Bitcoin and 112 Bitcoin, right? So if we just hit synthetic volume, and what we're going to do here is we're going to shift this. So you can see here, volume times price for linear contracts, show BTC volume as USDT. So if we hit apply and rebuild, 6789, now all of a sudden, if we zoom in, you'll see all of these values are in USD value, okay, which is what I prefer. Now I'm going to run through all the different text types, etc. as well, so don't worry about that. But these are just the very foundations of what I do. Now, what I would also do personally, I'm going to show you exactly how I would set it up as well. This is really, really interesting stuff that you won't really see anywhere else in this case in relation to aggregated data. If you right click, chart settings again, right now we've got Bybit, right? We're using Bybit data, so you know, Bybit USDT, but I also want to be looking for Binance, okay, Binance USDT. So if we add in here Binance, we're going to add this pair in, and I want to enable this so you know it shows. I also want to sync price. You want to sync price so that basically you're going to be using, and it's going to get a bit complex here, you're going to be using Bybit as the base pair, okay? And I'm going to be moving into the basics and everything as well in a second. I just want to show you first off how I set up my chart, just to be clear. So you want to be setting up use sync price, include volume data. I will include OI data for now and this, but also you want to literally, I would check every single box here, okay? So now if we apply and rebuild, 6789, now what we've got really, really, really powerfully here is we're still looking at the Bybit candles. So because I trade on Bybit or wherever I'm trading, you know, you'd set it as your base pair up here. So I'm trading on Bybit, but on top of that, we've aggregated the Binance volume inside of each candle as well. Okay, so basically this is now Bybit and Binance volume combined. Really, really powerful stuff there. So yeah, this is how I'd really set it up. Again, what I would sometimes add, maybe if you want to add, we can go to BitGet futures and add in this. But there's a ton of different fun things you can do there if you want to do that. So yeah, oh, and you can even add in Coinbase. So I'll leave it at this for now. This is how you do aggregated data in like its most basic format. But I just wanted to show that there as well. It's really, really important. Now, obviously, you've got the cluster type. So if we just remove any sort of cluster type here, you'll see that you've got the red and the green. Okay, and this is just going to be showing you where market orders are coming in. So the footprint chart as a whole, if you check out any of my previous videos, is going to be going over market orders only. So it's going to be showing you market orders. Inherently, to have a market order hit, there's someone on your opposing side that has to get their limit order filled. But primarily here, we're looking at market orders. Okay, so the green is market buys and the reds are market sells. Now, really, really important to understand just before I dive any deeper than that, because a lot of people get confused at this part. Just because I'm saying market buys doesn't mean I'm saying new market buys. Okay, so you have to split this up into 4 quadrants in your head at all given times, really. So what you'll have is, I don't want to dive into open interest yet, but you have 4 different types. Okay, you have new longs. Type this in. You have new shorts. Okay, and then you have longs closing. And then you have shorts closing. Okay, so new longs, new shorts, shorts closing, longs closing. Now, just to separate this up, the new longs and the shorts closing, these are both forms of market buying. And these on the right are both forms of market selling. Okay, so just because I say on the left hand side here that this is market buying, that doesn't mean there's actually new longs always entering at these different levels. It can still be shorts closing, and I'll talk you through this as well later in this video around this stuff. So I really wanted to make that clear. There's 4 different segments to this at any given moment in time. Focusing and moving forward from there, so we've got sells and buys. I just wanted to clear that up. Hopefully that makes sense. And then we have all these different cluster types. So this is the delta cluster. Again, this is really down to your preference as to how you want to be viewing things. You have the volume cluster, which is going to be showing you where the highest volume is. Again, I probably should rewind a bit here as to what delta and volume are if you have no idea what they are. So volume is typically, if we just highlight this, the amount of transactions going on. So just right, so you got volume is equal to transaction amount, and then delta is market buys minus market sells, or the difference between the two. Okay, so this is really important to understand. So volume is just simply the number of transactions going on. So what I'll do here is, you have the option for, so I just really focus on this here. Top left, you've got delta clusters. You can just select your cluster type. I'll go through those, and you'll select your text type. Now, before that, I just wanted to explain all this, which is if I select bid ask, okay, or if we select imbalance, okay, bid ask, right, on the right hand side you've got market buys, on the left market sells. Okay, it's a really good, I didn't want to bring this up, why not mention this? A really simple way to remember this, if you don't want to always remember that market buys on the right, sells on the left, I just remember stop loss. So sells left, stop loss, and that's kind of my anagram for remembering it. If you want to, is that an anagram? I'm not too sure. Just, I'm remembering that the sells on the left, it doesn't matter. But yes, market buys on the right, sells on the left. So this is just showing me, if we just select volume here, okay, 46 million volume here and here, but we don't know what the actual, this volume is consistent of new money coming in, market buys, market sells. In my opinion, this is very, very limited data to some extent, because you're just getting an idea of where the most volume is coming in, but it's not telling us in any form the direction in which that volume is coming in. Okay, we have no idea, are they buying up here, are they new buys up here, are they new sells, or are they people closing positions? We have no fucking clue. So if we then focus on delta, right, delta is the difference between market buys and market sells. So what I'm going to tell you to do now, just as a bit of a lesson, is I'm going to tell you to focus on this minus 2.8 million at the top. Okay, focus on that value. Now, if I shift this now, so we're on delta, if I shift this to bid ask, okay, this is going to show us, again, market buys on the right, market sells on the left. Okay, and if we subtract those two values, you get minus 2, you would get 2.8 million. It's just rounding down. It's not showing you decimal places in this, but you'd get minus 2.8 million. Okay, and that is how it's contracted. Market buys versus market sells. There is, categorically more selling going on at this level, even though not by much. There is more selling going on at the highs here. Minus 2.8 million. Now you'll get this in more aggressive natures. Minus 30 million, whatever it may be. Personally, when I'm looking at order flow, I'll talk you through this later on, maybe within the Entropia or whatever it may be. I'm not particularly looking at individual values. I'm really simplifying the concept of order flow. I mean, I could really dive into the nooks and crannies of diving into every single value, but that's not where I really find my edge personally when I'm looking at order flow. And just as a reminder to anyone coming into this new, because I'm sure there's going to be a lot of people coming in from the ground up at this point, you don't need to be looking at individual values. And there are cases where you can, mainly like the DOM, the depth of market, tsize in particular. I'll focus on those another day. But yeah, you don't want to be focusing on that. I really would focus on, I'll tell you what I'd focus on in a minute. Focus on generalizing each candle into a few different components, such as what's going on in the candle and where is it happening. And I'll discuss that later. So obviously hopefully you understand volume and delta. So volume, again, number of transactions, delta, difference between the two. And then obviously we have the cluster types. So if we've got cluster types, volume profile is just showing us, visually where the most, if we just turn off text type, just focus on the clusters for now, where's the most volume coming in, okay? And it's going to show you this, okay, through all of these. And then if we're looking at delta profile, again, it's going to be showing us where the most negative, it's going to be showing us, if we go into settings, in this case, in EXO, you have the option, and I'd always leave it on this, clusters, to leave it on volume based. So this is actually going to be showing us still it's basically a volume profile, still the exact same. It's really important. This is something no one really mentions. It's still a volume profile, but it's just overlaying the delta coloring of what's going on at those high areas of volume. If you switch this over really quickly back to volume profile, you can see the actual shape doesn't change. The shape would change if I change the calculation mode from volume to delta based. Okay, because now we're looking at specifically where there's a massive swing in delta, almost where there's an imbalance in high delta compared to the rest of the candle. But I'll leave this on volume. This is the best, you get, in my opinion. There's no best, but in my opinion, this is the best. Okay, so that is a few of the different cluster types. Just moving forward a little bit. Again, bid-ask profiles just showing us buys on the right, sells on the left. Delta ladder cluster. These are all just different ways, and this is why I really focused on talking about volume and delta. Every single one of these ways, apart from open interest, it's just a different way of visualizing either volume or delta. It's just a different way of visualizing that. Okay, and if there's anything you think I'm not covering in this, please let me know, and I'll cover it in another video separately. There's obviously open interest based, so this is interesting, I guess, to some extent. It's just going to be telling you where, and I'll go through open interest in this video as well. There's going to be basically where's the most open interest coming in within the candle itself. Okay, so where is open interest really increasing? New money coming in. So for example, at this high here, there's a large spike in open interest here. Important to understand, people will really jump to conclusions too quickly without actually understanding the info. What does this tell us is that there's open interest increasing. Just because it's at the high doesn't mean it's actually new longs opening. It could still be new shorts. Now, it's more likely to be new longs, more than likely, but it could still be new shorts. It could be a complete mix of both. It doesn't have to be one direction getting a massive swing. So what you can then do is go to text type, open interest, and let's just put on, what we'll do is we can add on a few different things here to see what is really going on. Okay. So what I would leave it on is I'll just leave this on OI created. Okay. My bad. This was on OI. Yeah, it doesn't make a difference. This is OI created, so new money this is just the new money coming in. The other one was just open interest total. This is new money coming in. Nonetheless, it doesn't matter. But here what I would really focus on is then shifting the text type. This is something I would use to delta. Okay. Because now this is like a really good overlay of where's the money, what's coming in regards to open interest. There's a lot of new positions coming in here. Okay, we can see clearly, and then we've got the delta type text type overlay showing there's a positive delta. So yes, it is, although I said that it could have been new longs or new shorts, it's more than likely to be new longs because the delta at this level is also buying. So you've got buying and the open interest increasing, two forms, two confirmations telling that these are new longs. coming in at this level. Now I'll talk you through later how to actually use this stuff to your advantage to some extent. But this is really a good way of just understanding the basic concepts of a few cluster types, text types, using a mismatch together. And also, again, like I said, this isn't just Bybit data. This is Bybit and Binance. Moving on from this stuff, again, relation to chart and text types, I wanted to focus on just the components of the candle themselves. Okay, so each candle itself, by the way, just want to make this clear, I prefer to use the delta cluster. Each candle itself, this is a really big way for me to understand footprint charts as a whole, is by separating it into a few different components. You've got the value high, value low, point of control. They're all got their own separate components. The same way you would see so in a range on TradingView, you'll have like a massive volume profile range, visible range, whatever it may be. Each candle has its own component of that, on an intricate basis. We're on the 15-minute time frame right now, and you can set different lookbacks, by the way, here. And maybe I should have covered that. It doesn't matter. But yeah, each candle's got its own intricate part of that, and we can be using that to our advantage. So if we just go to, on the left-hand side, POC, value area settings, and then down to value area, if we what I would do is the value area opacity outside, you can shift this down to like 30, right? And then you've got the value area setting. I would leave this on 68. That's the default. I put it on, and everyone's going to get that setting. But what you can see here is that outside, the non-shaded area that's outside of value. We're now outside of value at this point, okay? And then the highlighted area is actually where we're in value. Okay, so this is actually the value area of the candle. And then obviously in this little yellow border is the point of control. So now we've got the value area high, value area low, point of control. Okay, really powerful stuff. Focus on that. And then you've also got, as a whole, different candle types. I didn't really focus on this, but it doesn't matter. You can see the candle in relation to that candle's value area. So now you've got a massive already an advantage of understanding every single thing that's going on in this chart already. Where's the majority of the volume coming in? The highlighted value area. Where's the candle closing? Where's the point of control? Where's the value low? Where are we the next candle? That's really cool, and everything about order flow and footprint as a whole is just getting those intricacies into detail. But moving forward, what I think really pairs with this well is using the FPBS. So if you just go over to here, effects, FPBS, you're going to get all this massive info at the bottom here. Do not overcomplicate this. By default, there's a few different things on. I'll tell you what to leave on, what to turn off, in my opinion, to begin with. Leave on candle volume, leave on candle delta. You could turn off the CVD session value. I use the rest of this stuff. I use max delta and min delta. But if you're completely basics, then don't focus on max and min delta for now. Leave them on, but just don't focus on them. And then the last thing I would do is I will add another row at the bottom, change the row type to volume, change this down to rect all. Okay, in ExoCharts, rect is just another term for liquidations, and then add on, you can add in shade. I'll just do something like this, so now we can match it all up. So now what we've got, this is really good, is now you can see every single candle's the entire candle's volume, the entire candle's delta, and then any liquidations coming in within that candle. Okay, and then we've also got what's going on at each individual price level. So because it's really important is that now, not only before what we had was, and most times, a lot of the time you'll just have, the volume at the bottom, what's the volume doing in, how high is the volume in each candle. But now what we've got is volume on two axes. Okay, you've got volume, coming in at each individual price level, but then you've also got volume coming in at each individual time. So you've got time, you got both, really. You got per candle and per price. Really powerful. Just wanted to get your head around that, and getting some problem solving around that as well is really going to be good for you all. Moving forward from there, okay, now you've got a few different components and you can be focusing on them. So you can be focusing on the delta, the volume, etc. But what I would be doing is now opening on open interest. I would leave delta bars. This is really powerful, something no one talks about. I'm not surprised. But if you turn on open interest, go to the open interest settings on the left here. Okay, we've got a few different things because we've got aggregated data on. Now what you can do is I can go to the open interest. I can completely turn off the candles. I'm not going to do this for too long. I just want to show you something, because I know a lot of people like this view. I don't necessarily find it too valuable, but I'm going to show you nonetheless. And then I'm going to fill history, and we don't need this, and we don't need any text. What we've got now, we've got two lines, green and a white one. Aggregated data on, and you can see here the white line is actually the open interest, okay, from Bybit, and the green line is the open interest from Binance. So now you can see really separating down that aggregated data format as well into two lines. But again, what I would say, it's not too important in my opinion. I would leave these both on, and I would actually turn these off. Okay, because you just got to put mix of two. It doesn't matter. You don't want to be overcomplicating things any more than they should be. But now let's understand the key components. This is really key now. I'm adding a marker in on the thing. I want you lot to pay attention now. I've talked you through, understanding the key fundamental parts of things. Now I'm going to talk you through kind of how I would use it and how you can really take advantage of this stuff in a basic format. What and where, right? What is going on and where is it happening? So if we just pick anything, and I want to make this clear, I'm paying attention to order flow specifically at my levels of interest, that I'm coming up through TradingView, sometimes session TPO, POCs, whatever. Go watch my previous videos. I'm coming up with them, well in advance, okay? I'm not just seeing a massive green candle on order flow and hitting the buy button. What I am seeing is, if we just reduce it down to like 200, put around the chart, okay, and then I'm going to imagine, I'm going to pick a candle here for us to go through. It doesn't matter, we can go through any candle. We'll go through this one here, okay, and let's just say you're interested in this low. Okay, so this candle's low is your level of interest. Maybe you're looking for a liquidity run, whatever it may be. How am I going to analyze that stuff using order flow? The first thing I'm going to do is isolate the candle. In this case, in the 15-minute, know the time frame you're trading from well in advance anyway. You should be well aware of that. We're going to isolate the candle. Boom, this is our candle here. What is going on in that candle? Specifically focus and dial in on the bottom part here. What is open interest doing? It's increasing. Okay, and I'm noting this down in my head. I know I can do this at the back of my hand. But I'm just talking it to you through slowly. Open interest increasing. Delta is slightly negative, but this is still negative. I'm not going to shy away from that. It's still negative, and I'm taking it at face value that it's negative. Okay. So I'm going to say that within this candle, you've got open interest, no new money's coming in, and you also got negative delta. So you've actually got, what you've got here is new shorts. So this candle is consisting, just hold on, before we jump the gun here and you start thinking stuff, this candle is new shorts. That's component one. What is happening in this candle? Just these two pieces of information. New shorts. Okay, rewind back to this thing I did in the beginning, where I went through the new longs, new short, that stuff. Okay, this candle has new shorts. Then where is that happening within this candle? That is then where you isolate the candle and go to the opposing axis and start looking at, remember what I said before about you have an understanding of both axes as to where the volume's coming in or what's going on, and then the price levels. Now we're looking at the price levels. Where is that happening? Where are those new shorts coming in? And that's where you can isolate the delta cluster. First of all, the value area. So I'm going to say, a lot of the volume and everything is going, this stuff is largely going to be happening within the value area. So now we've isolated the value area. Value area high, value area low. Again, this zone here. So now we've already eliminated that this isn't happening up here. Again, we've already eliminated that. And now we're saying, okay, well, it can be happening within this value area. Where is it largely happening? And this is where you then use your it's subjective. But at this point, it's fairly easy to understand where. I'm going to say down here. This is where the large amount of that negative delta open interest increase is happening. New sales. Now, you can be much more specific in this by switching the open interest text type to open interest created. And you can see where there's open interest being created. And then open interest remove versus created delta shows where open interest is actually just creating as a whole, as a net whole. So all the new shorts are really piling in at my level of interest now. So understand first of all what's going on in any candle, and then isolate where it's happening using the value area and delta cluster shading, or anything else you want. Hopefully that's clear. And alongside that, so you've got the what, where, and then where's the candle closed in relation to that information. Okay, so for example, on our case down here, the candle's closed away from that, and we're looking to long. So you've got these new shorts trapped down here, open interest increasing down here, candle closed up here, trap that, and now that's going to be fuel for the upside. Now, why is that fuel for the upside in basic terms? Is because if you've got new shorts have entered down here, they're instantly offside. Again, drawing this matrix out quickly. If you're in a short, I don't need to do this. If you're in a new short, okay, and you want to close out of it because you're offside and prices moved away from you quickly, to close out of that short, you have to buy, right? So that's shorts exiting, hence that would move the market further towards the upside. So you'd enter here knowing that these shorts are already puked, and the likelihood is that they, there's a chance for actual continuation and for them to actually fuel further upside movement. Okay, so that is delta, open interest, understanding those core concept there. Again, you can add on delta if you want, but this is no different than just having the actual values here. You don't need to have this on if you don't want to. The next thing you want to be looking at is net longs, net shorts. I say looking at, I just wanted to mention this, but it's on my notes to mention this video. You don't need to be looking at this personally. I'm just going to tell you straight up. What I just went through there is a much more accurate way of going over what's going on within the candle than just peeling in at open interest delta, at net longs, net shorts, sorry. It's better to look at open interest delta, the candle, the positioning, etc., than to just look at net longs, net shorts. It's an estimate. It's there. Use it if you really want to. But like I said, it's better to do the other way that I just went through, to be honest. Yeah, that is everything really in relation to open interest, net longs, net shorts. I'll go through a few other features of XOTNA right now before we move on to TPO. But just as I mentioned, up here you've got tsize. I need to do a whole separate video on that. There probably is on my channel. Just go through to how to trade the larger traders. It's there somewhere, spotting larger orders, etc. Go and watch that after this video. You then have VWAP. You can select VWAP settings. Again, there's VWAP on my channel. There's stacked imbalances. This is really useful for identifying within each candle where large positions are actually coming in from. Well, I say large positions. If we're looking at imbalances, I'll mention this quickly. We'll go over imbalances. So if we go here to text type, imbalance, okay. Within this part of the chart here, okay, an imbalance, I'll change the setting because I'll change the imbalance setting to 400, okay. An imbalance is diagonal. So if we're just focusing now and we've got the chart, the text types on imbalance, let's focus on this all. And for example here, 22 million cells, it's going to be diagonally looking up. So these 22 million cells have overpowered the 2.8 million buys that came just before it, and these sellers slammed through these guys by 400% or more, hence why we're highlighting it. Okay, this 31 million is 4x this 3 million, this 12 million is 4x this 2.7 million buys, and you can see how that's going there. Now on the reversal side here, these 16 million buys have smashed through these 3.7 million cells on the other side. They've had to smash through them to get to there. Powerful. Now, what works if you then have a setting in the chart, FX, imbalance, where you can then highlight where you get these massive stacked imbalances like this, okay, and you can fade them, have a specific minimum imbalance volume of, let's say, 60 million, okay. And now you're going to only, well, it's not really highlighted any. We can't see any here. Let's maybe take a 0 off. It makes it better. So the minimum imbalance volume is now 60 million. You can filter between different volume amounts to get really good volume-based SR levels. You know how I said before, I'm only coming up with levels from like TradingView, etc. And stuff like that. This is the only time using like specific intricacies in relation to imbalance volumes, POC volume, that I will mark out levels based on like stacked imbalances, etc. Really powerful. And in particular, if you're looking at like stop runs, etc., you will see like a massive run at the highs. For example, you will see a massive run of buying imbalances, and at the lows you will see a massive run of selling imbalances at the lows. Okay, so this is what you want to see. Good for SR, good for identifying, look, massive moving up, come back down, test these large blocks of buying imbalances, okay, that came in here, and they protect their position almost. Continuation again, same down here, continuation, and you can fade it by volume, and there's tons of other settings there. Go through my stacked imbalances video. I've got a whole one on that. But yes, the last thing I want to talk about is CPL, CPR. I won't dive into this too much, okay? But you can essentially have separate profiles on the left and right, you know, previous days, volume profile, previous 3 weeks is volume profile. I might cover that a bit more in the TPO segment, but no, you can have a complete different data source on either side of your chart. You know, by default, it's showing you the developing days volume profile. You can set this to previous day, previous 5 days, apply and rebuild. We can aggregate, use the same aggregated data pairs from chart as well, so we can add in that. Oh, there's a ton of customizing to this stuff. Now I really enjoy it. Like there's so many levels to it all. I wanted to talk you through the core components of it, and yeah, there's rect. There's, you know, you can have rect. This by default, you're going to need to adjust this definitely to show hide orders less than 90k. Okay, and then what we'll do is show order and volume. This is going to be showing you liquidations and where they're coming in. These massive bubbles, they're showing you liquidations. Okay, they're coming in at this price, and this is the amount within the entire candle as a whole. And you can see, you know, at the highs, you're getting large liquidation bubbles, you know, longs liquidated, shorts liquidated, shorts liquidated at the highs, longs liquidated at the lows. You know, this is what you want to be looking for, and filtering between specific volume amounts. So if we put this to, I don't know, 1.2 million, you can now only see large bubbles for large liquidation regions. Okay, so yeah, this is the promise. This is the last part of this segment here. I will be covering like sessions and TPO and everything like that within the next part of this video. So yeah, we're gonna move on to that now, but thank you everyone so far for watching. Okay everyone, let's continue from here, and to move forward now, I'm going to open a new tab. I'm going to open a chart, and I'm going to do the same thing. Bybit beats USDT. We'll let this load quickly. Now, really important to understand as well, you don't have to create a new chart for TPO. I just want to mention this just at the beginning. Okay. You don't have to create a new chart for TPO. If we just go back to that chart we were just on, you have the option for TPO at the top. We can add in a TPO overlay and completely have TPO alongside our time-based charts, which is actually still really powerful. I was debating whether I should just continue from this part and not even create a new template, and we're going to go that route. Actually, no, we'll continue on a complete new separate chart. So we'll add in the TPO and we'll turn everything else off. Okay. Now, just to be clear, CPO stands for time price opportunity. Again, TPO are going to have their own separate tick sizing. Okay, you can see here. And by the way, big factor here. One, I'm going to change the look back to like 21 days so we can get more days in. Two, the most common TPO market profile block sizing is based upon the 30-minute. So you set this to 30-minute. Doesn't mean you shouldn't definitely not have it on the 15 or 5-minute, whatever. But I tend to have it on the 30-minute. Okay, and now this is set up. Let's move over to TPO tick size, and let's adjust this again the same way that I said before. This is based upon volatility. This is going to adjust going through time, and it's really down to your independent look. On ES and Q, there are more defined set values you could potentially be having on this. But for me, on crypto, especially Bitcoin or any other crypto coin, whatever it may be, this is really down to your look and feel. Okay, and you can set this as you want. But we'll set, you know, moving from that, you know, I like to have mine something more like this on the BTC USDT Bybit. This is the type of look I like to have, a fairly blocky look where you can see the letters just about. If I then double click on one, I'm going to expand the clusters, expand the text, focusing solely on this. What this is now telling us, just as again the basics to TPO as a whole, you're going to be looking for, basically it's going to be telling us where price spent the most time throughout the day, or how price has spent its time throughout the day. So you can see, and it formats that into letters and rows. So A, B, C, D, E, F, G, H, P, Q, R, S, T, and all the way up to X. Then it goes to lowercase and does the same thing all over again until the next day. Okay, and now you can see this format. If we just overlaid really briefly 30-minute candles on top of this, you can see it lines up perfectly, and that's what it's meant to be doing. Okay, this is how it looks. If it looks confusing to you, just, you know, turn this up. Look, relate to the candles. It's the same thing. Okay. Then, if I double click and reverse it, let's reset this completely, it just puts it into one big profile to show us how much time price is spent at each different price level. Okay, so that is how a TPO is formed in regards to its basics. Similar to a volume profile, it's going to have value area high, value area low. I'm not going to sit here and feed you shit that I don't use personally. I'm not going to do that. Now, they might be useful comparing the discrepancies between value area high, value area low of the time profile in relation to the volume one. What I would do, chart settings, and then go to TPO, volume profile, show volume profile as an overlay, and then we can overlay it. Or it doesn't matter. You can do whatever you want. But this is another look. So basically, we've got where price has spent the most time with the volume profile, and then alongside this on the right hand side now we've got the volume profile, so where price spent its most volume. Okay, and this orange thing here is the volume point of control. So if we just go back to the settings again, okay, TPO, volume profile, and then from here what we're going to do is let's just enable, go to POC, and we're going to show the time POC ray, okay, and then we're going to show the volume POC ray. I'm going to change this color to, I usually like having this gray, and then I like having the time one red. Okay, doesn't matter. You can have it as what you like. But what you're now going to be seeing is that, well, I don't want to confuse you with this as well. Volume profile. I don't want to show the delta overlay. So we've got the volume profile on the right, the time on the left. We've got, each block's consistent of the highs and lows. You understand this now. Where price spending the most time. They're going to have, like I said, you got the value area high, value area low for the time profile, and then you'd have the same thing with the volume profile. I don't look at the discrepancies there. What I do look at and pay attention to in regards to TPO itself, market profile, few things. Number one is poor highs and poor lows. The second would be discrepancies in point of controls. Okay. The third thing would be like single prints, average candle range, and a few other things that I'm going to cover now. So the first thing being, we'll cover TPO discrepancies, POC discrepancies. So we've got the time point of control down here, hence where price spent the most time, one down here, and then you can compare that to where price has spent the most volume, which is up here. I much prefer paying attention to volume based levels and values for reactions, acceptance, whatever it may be. So I'm not going to be trading necessarily off of the time POC, although that may come into confluence with a volume based, high volume node zone. Okay, so just pay attention to this stuff here. Discrepancy between the two. So if usually they'll be coming together, so you can see, if when they're like this, that means they're both on top of each other. They're basically together here. They're together here. They're together here. Today they're slightly separated, but let's just say price is trending up on this day. Well, we don't have to pretend. Let's see what it does. Let's see what it did on this day. It is. Okay, so this is a good example. Price is trending up on this day, okay, and the volume POC, this gray ray here, is higher than the time one. What's that telling? That's telling me that price spent more time of the day down here. Factually, it spent more time down here, and even though price has spent less time up here because there is no time POC up here, it's seeing more volume up here. Now that is in my head, I'm looking at this. I'm going, this is your value here, another set of value here. Okay, and you're seeing more acceptance up here than down here. This is more of a bullish signal than anything else. Okay, because you're seeing more acceptance up with the volume profile shifting towards the upper end of it all. Okay, so this is how I look at it. Again, it's not just for the bullish scenarios. You can get this bearishly as well. I mean, look at it today. Price has spent more time up the highs than it has at the lows, although we're still below this POC. It's still volume is still slightly shifting lower. Okay, so you want to be using this for deciphering the few different discrepancies there. I can talk forever about everything, and it's really just about me trying to narrow this down to the most important things to be paying attention to. Okay, that's number one. I wouldn't say it's the most important thing, but I definitely look at that throughout the day, especially if you have a massive long ongoing range. Okay, a massive ongoing range, and then multiple days, maybe a week, whatever it may be, and then you break out of that range and you see the time POC on the day shifting, well, the volume POC at the highs and the time POC at the lows, meaning that price is seeing a volume based acceptance outside of the range. Hence, I'm not going to fade that move. You see what I'm getting at there? Really powerful stuff, just through just a few discrepancies. The next thing I'd be focusing on is the poor highs, poor lows. I've mentioned this a lot of times for you all before. I would say this. Looking at the poor highs and poor lows. So what is a poor high, poor low? If you're looking at every single profile, you'll see that generally you'll get a low which is consistent of one block, selling tails. These are buying tails. So at the low, they're buying tails. At the high, let's just remove the candles. They're selling tails. Okay. So what we've got at here is 2-block buying tail, where you've got one block. That's a 2-block buying tail. And at the high here, oh look, there is no there's no selling tail. This is just a 2-block high. This is now considered a poor high. Okay, price has spent 2 30-minute candles worth of time within this specific price zone, price tick region. Okay, important things to note here. One, poor highs and poor lows will vary based upon your TPO tick size. Okay, more than anything else. So really keep that in mind. Okay, is that your tick size at the top is gonna, if I change this to like 20, this changes everything, and all of a sudden I've got like a 20-block buying tail at the low, and even at the high I've got a, even though small, wow damn, I still probably got like a 6 or 7. What I'd recommend is just find what works for you and leave it there. What I would recommend even further is testing everything really diligently with data and statistics, etc., which I'll go through maybe later in this video. But yes, so the importance of these poor highs and poor lows, if I see one, in short, I'm looking for price to revert back to there. Now, if I just put on the candles again, you can see this. So, for example, this high is fairly clean. You've got 1-block selling tail, so this isn't a poor high at all. If you look at the lows on the day, okay, 2-block low. So price has spent decent time there. This isn't a good low. I'd be saying to myself the next day when price opens here, yesterday had a poor low, let's look to grab that. Now, it's very important to not just do that blindly, because you can just get into the habit of going, well, there's a poor high yesterday, there's a poor low yesterday, I'm going to target that. Go and do your stat testing, because it's going to differ per coin you're trading. You know, I'm telling you this from a point of Bitcoin, and I haven't even spoke about the way you can really, you have to test certain tick sizes, etc. You really have to be specific in this and not just say, go off of someone random saying, you know, what is the chance of a poor high or poor low being tested the next day? Go and find the data and go and test it out multiple days. You know, what's the chance of poor lows or poor highs being tested within 3 days? You know, it's not tested the next day, then what's the chance it gets tested? But obviously in this case it did. The following day, again, what happened? You ended up breaking the low just about, but you then put in another poor low. It's another really bad low. Okay, into a high again. That's a poor high, and then you end up, it just leads to complete fuckery, to be honest, because you've got a clean high here, poor low, poor high. It takes the poor low all the way down to here, leaves the poor low behind, reverts all the way back to this poor high at the top, takes that out, and then continues dumping back towards the poor low. There's a ton of stuff you can read from this. I'm not saying to trade in the direction of every single poor high, poor low, but do your testing, use it as reference towards, you know, trend continuation and plays, etc. Like, this was really nice. I like when I see this when there's no wick at all, okay? Because I've got certain stats which tell me that this is a really good chance for trend continuation. Any dip, you know, subsequently is worth buying to then target towards those highs in relation to TPO, okay? This is how TPO works and market profile. Now, I can get in talking to you about day types and stuff like that. I personally don't use that stuff for reference. I can talk about it for ages if you want me to, but there's no point in me talking to you about stuff that I'm not going to actually use. I'll just be waffling and giving you really not too subsequent, much substance in relation to the info I'm going to be sharing. So obviously you've got poor highs, poor lows, single prints. Now, single prints, fair value gaps, whatever the fuck you want to call them. We discussed poor highs, poor lows at the top and bottom of a profile. Okay, so poor highs and poor lows can only form at the top or the bottom of a profile. Single prints are where you have these single blocks, 1, 2, 3, 4, i.e. price has spent little time, one candle, within a specific, a short zone of price, or it could be a massive zone. So here you can see price from F, 1, 2, 3, 4. Exo charts will tell you here as well the price range and the amount of blocks. So 4-block TPO here, which is a single print row. Now, what I've done in my settings, and it's on by default because I prefer this, so I just enabled this by default for everyone, is by actually disabling this shows only first print range, right? You now can see the whole single print if you want to. Now I don't use this very much. You can if you want to see the whole single print, but I personally don't. And the reason for that is from my testing, I found that the fill of the single print, so when, for example, when you print this single print, price moves really quickly down through a zone, very little time spent in this specific zone here. I found the fill level, the first print, to be the better reaction of a trade. So hence I just marked that out for everyone. I just saved everyone the time. The very first touch of the God, losing my words here. The first touch of the other side isn't really worth it. You want to see once price is filled, that is where you can get a good reaction from, okay? So yeah, this is why I do that. You can leave that on if you want. Single print minimum TPO range 3, I leave that on. And this is just my settings. Personally, just do this and you can go through here and get my settings. Now, I said in the beginning, TPO, 30-minute candles, you know, tick size, whatever you want, whatever, is important. But now you can also talk about for higher time frame traders. I get this question quite a bit, and we're going to go through this now together. You know, if it goes a bit tits up, fucks up, you're here for the journey, I guess. If we just select this now to 4 hour, right? Now each day was set at a each day is showing me a daily profile, but now the whole TPO is made up of 4 hour candles. This isn't that great. This isn't that useful. But if you're a higher time frame trader, what I would do is go to TPO, right click TPO, and then I'm going to go to, instead of split by session, split by exchange week. Now, each 4 hour, the 4 hour candles are building up a whole week's worth of exchange of data of a TPO. Again, in this case, I'll drastically increase this. Okay. I'm going to be honest with you, I haven't tested poor highs and poor lows on a weekly based TPO profile because I'm more intricate trading in that sense. But you can definitely do that. If we just select this, and we're going to want to extend the days. Let's do 91. We'll let this load. But you're going to want to do that. And you want to really test it, especially if you're a swing trader, etc. It's worth doing all that stuff there by just collecting data on TPO as a whole. Obviously, you've got initial balance. It's a bit all over the place, video, but at this point, I don't care. I'm really deep into it. But yes, you can separate all of this stuff into weeks. I want to remove these lines. Are really annoying me, so it doesn't make sense to have them on here. Trades, volume, completely plain look. And now you can see here that we've got each TPO profile is consistent of 1 week worth of price action, consistent of 4 hour candles. Okay, so every single 4 hour candle. And again, the same principles as what I applied to you in relation to POC discrepancies apply exactly to here as well, and not just on the daily. Okay, so use this to your advantage. Test the poor highs, poor lows in that case, and don't overwhelm yourself with the data and the info. There's a ton of stuff you can be looking at within TPO as a whole. Obviously, you've got initial balance. So initial balance is the first, typically, hour of price action. I tend to find it not too useful with crypto personally. It can be a game where the most amount of volume comes in, but you really want to be, don't take someone's word as gospel. Okay. Someone can sit here and say initial balance is really good for, X reaction, Y reaction, but I tend to find it better if I really dive into the root cause and root logic of it all and break it down from there. So if I'm just going through this, we'll just go back to a default TPO, which is blocks, letters, session split by exchange day. Then we're going to select this back to 7 days and then 30 minutes. And very quickly, we've reverted all the way back to a daily TPO chart. Okay, now we're back to here. If I right click, TPO, IB stats, initial balance is on, and I can have IB lines and I can have IB area. So now this is the initial balance area. Number of first candles for the IB. I want to set this to 2. This should be set at 2 really, to show the first 2 candles making up the first hour of price action on the day to make up the initial balance. Now this can provide us a good SR zone, potentially, I guess. I don't use it for that. What I would say is better is when you're looking at TPO, obviously you've got days and weeks and months. You can separate price into any sort of quadrant you like. So now we're going to dive even deeper. If you're at this part of the video, you're getting quite into the weeds of it all and how you can really use this stuff to your advantage. But if we just go to here, right click, chart settings, TPO, and then we're going to go to blocks and letters, no, session split. We're going to split into, well, you're going to go to chart settings first, actually, my bad. Then session. Then we're going to go to here, okay? And then we're going to separate this into, I think it's this one I have here. But you can basically choose your custom sessions here. And only show, so only chart use only selected sessions. So you can basically, rather than have the TPO chart based on day, week, month, you can separate each individual day into different components, which I'm going to show you now. Asia, London, New York. I called it end. This is my own custom sessions, and you can go through manage sessions, custom from there, customize it all from there. But let's just say right now, let's just show all sessions first of all. Well, this is going to still show this, but if we go TPO, blocks and letters, session split, split by session, now you can see here, we're going to have to reduce it again. And this initial balance is really irritating me. Okay. Asia, London, New York, end of day. Okay. And this is where I wouldn't actually be using a 30-minute. I might go down to the 15-minute for TPO. Like I said, this is the only scenario I really break those rules for. And now you can see here, each individual session has got its own different components, and you can be using that to its advantage. Now, what I would be doing is you can be merging sessions. So you can double click on a session, you can hit merge. You can do this with anything, by the way. I just tend to do it in sessions a bit more. Merge, and I can merge a custom amount of sessions back and merge different profiles together to get custom POCs, etc. I am really paying attention to like the volume based levels over the time based levels. I want to make that really clear by the end of the video. I hope you understand that the most. Okay, that is what I'm paying attention to the most: the time based level, the volume based levels over anything else. So when I'm merging this together, I'm looking at where's this volume point of control coming in that can provide a support or resistance level moving forward. So you can see here now, price is going up, you know. And you can be using this in real time and seeing this volume-based level uses support to springboard to new highs in this case, okay? And you can do this at any point. You know, if we just merge, and it's super fast the way it does it. You know, it just does it instantly to merge all these different TPOs together. But yes, sessions, merging the sessions together in TPO sessions. Again, do some testing. I'm going to show you a bit of an advanced feature here. Sessions. Chart use only selected sessions. So let's say I only wanted to see New York sessions. Apply and rebuild. Now I'm only looking at New York sessions. Okay. These are only the New York sessions, cutting out everything else, giving you custom gaps. We're now moving really, really advanced here. But yeah, this is I love this type of stuff. I love the software that does it. Yeah, it's really neat the way we can do it as well, and we can use this to our advantage as well. You know. Everyone's looking for gap fills in other markets. There is no technical gap fills in crypto, but you can make your own and make it really well. I mean, this is something I did myself. You know, looking for what is the chance of New York sessions previous day close being filled the next day. You know, calculate stuff like that. Use it to your advantage. So yes, that is kind of almost everything to do with TPO that I'm using, at least in EXO charts primarily. I don't use anything else. I would say this, I'm using EXO desktop. You can use EXO web for a much more fluid, I guess, view, dynamic views on the web. It's web-based, but EXO desktop has much more features, and we're constantly developing it. Okay, so I'd recommend you check that out. Anything else I wanted to mention? Not really. Obviously, single prints, highs, lows. I will cover this briefly, just so you can understand what this is. Rotation factor, in very short. How good of a job is the market doing trying to get where it's going? So in this case, if the rotation factor is really high, okay, and the market's moving up, that is perfectly more than fine. In this case, look at this. This is still about okay, to be honest. The rotation factor is 2. The market really is where it stayed where it is, maybe slightly moved up, which is perfectly, it comes into correlation with that. This session here, the market has moved up very slightly, but the rotation factor is -8, meaning that overall there's more negative delta, there's more selling going in, but the market isn't moving down that much within this session as a whole. You know, this how good is the market doing at getting to that rotation factor value almost? So just use that, compare those two. You obviously also have one other thing really powerful, MP statistics. Average candle range, if I can find it, down here, it's down here, isn't it? TPO MP statistics. Where the hell is this? Ah, no, is this, and then I can just change. You have to change this to actually say it. So now, average candle range is like simply the range, the average candle range. God, it's self-explanatory, and I'm using this quite a bit actually sometimes to determine. Okay, you know, sometimes I'll set my alerts the average candle range before the levels hit. So, you know, for example, if I'm looking at 99k, I'm looking at the session, I'm saying each individual candle's moving 350, you know, on average. So I'm going to set my alert $350 below that. Okay, stuff like that. But yeah, I hope you gain into it. Again, there's so much more than this that covers order flow and footprint that I know of and talk about so much elsewhere. But yeah, check me out on X. I hope you lot have found this somewhat valuable. There's been a shit ton of strain on my voice at this stage. If you want any of the templates that I use personally, like this type of stuff, again, I'll probably be covering this stuff more in Entropia. Check us out, Entropia Intel. Check out Exo charts. I might do a free Exo giveaway, whatever it may be. But I'm hoping you lot found this valuable. Thank you for watching, and I'll catch you all later.